Hello everyone and welcome to Momentum channel. My name is Mo, and in this video we're going to be taking a look at our Smith Manoeuvre portfolio that we started it about 6 to 7 months ago. We're going to reflect on where that portfolio is, what we've learned over the past several months. We'll also be sharing with you the results of the latest Canadian survey of consumer expectations for Q2. There were some key nuggets in there that we would like to share with you and reflect on. Lastly, of course, we'll walk you through exactly our entire portfolio that we have with Smith Manoeuvre through Quest Trade Investing and share that with you transparently. Let's get into it. Bank of Canada recently published the results of Canadian survey of consumer expectation for second quarter of 2022. The results show that consumers' expectation for inflation have risen, alongside concerns about prices for food, gas, and rent. Short-term expectations are at record high levels as well. As you notice, expectation for inflation 1 year and 2 years from now continue to increase in the second quarter of 2022 and reach a new survey high. What's more, Canadians think supply chain issues, the persistence of pandemic, and elevated government spending are mainly driving high inflation. Overall, Canadians are more uncertain now about how inflation will evolve, and survey respondents are more likely to have opposing views. On a more positive note, most respondents believe that the Bank of Canada has the credibility and tools to bring inflation back to its target. The respondents' belief in the bank's ability to achieve its inflation target has not changed materially since before the pandemic. Consumers reported that interest rate hikes would directly affect their spending. As for the impact of interest rates hikes, respondents believe that it would directly affect their spending. The survey asked what actions people would take in response to increase of 1 percentage point. According to the responses, most consumers who indicated they would take action said they would cut spending, increase their savings, postpone major purchases, and pay down debt. We'll include the link to the article by the Bank of Canada in the video description for your reference. For those of you who have been following our journey here on Momentum Finance, you know that about 6 to 7 months ago, we decided to refinance our house and change our mortgage to a re-advanceable mortgage that allows us to use Smith Manoeuvre, essentially being able to tap into the equity of our home and borrow that amount to invest in the stock market. We decided at the time to switch to Scotiabank mortgage. It's called STEP, or Scotia Total Equity Plan, which is a flexible borrowing plan tied to the equity in the home, allowing you to tap into the equity of your home, as well as potentially, as you prepay your home faster, borrow that money and be able to invest it in the stock market. In the beginning, in the first few months, I must say that there were a couple of different hiccups with our mortgage, in a sense that the limit increase on the home equity line of credit attached to our STEP was not done automatically. As we were paying down our mortgage, the equity was sitting in those respective mortgage accounts and was not being transferred or increasing our home equity line of account to actually borrow more funds. Obviously, it has been quite disappointing in that sense, but finally, after about 5 months or so, the auto limit increase now is in place, which in a sense, as soon as we pay the mortgage down every month, we are paying it on a monthly basis now, about $600 of the equity is now being added back to increase our limit of our home equity line of credit. The challenge though that we are facing right now, and this is something that's still evolving and we'll be sure to provide an update on, is as we pay the mortgage down faster, let's say if we make any prepayment throughout the month, we would have expected that prepayment amount is also added to the limit increase. But the truth of the matter is right now, as we see it currently for our account, the way that it's set up, that prepayment amount sits in our mortgage account. We've talked with our Scotia Bank representatives and some senior reps there. They're still trying to figure out whether that's how it's supposed to be done, or whether maybe the account has not been set up right. Ideally, the whole purpose of having a Smith Manoeuvre account with a re-advanceable mortgage, the idea is here for any of your prepayments to be also available as equity so you can borrow it and invest in the stock market. We've made some videos here on this channel talking about the ability on knowing about Smith Manoeuvre, how it benefits you, and especially for home owners here in Canada. Check out some of those videos. We'll add the link to the description as well as to the video cards for your reference as well. But if any of you has experience with the Scotia STEP mortgage and has experienced that, would love to hear from you. Let us know if this is a common thing that is happening with this account, or is it perhaps something that our own mortgage is not set up right? We did some research, and it seems like there are other readvanceable mortgage out there, like Manulife One, or there are other products by RBC or even BMO out there. At the time, though, when we got this mortgage, we went through Smith Manoeuvre certified mortgage broker. So the idea was that they know the inside and out of these mortgages, and they would have provided us the best advice. That remains to be seen. We are trying to contact them as well to get a better understanding of how this mortgage is supposed to work, because that was our first experience, and we really relied on their expertise and advice as they recommended the suitable mortgage for us. We'll definitely put up some updated videos in a few weeks or so and keep you posted how that experience goes. Anyway, now with that out of the way, let us take a look actually our actual mortgage accounts that we have now with Questrade with our Smith Manoeuvre portfolio. You notice here, currently the balance of our account is just shy of $71,000. The balance of the account has definitely evolved. You notice if you go back to the past 6 months, over time, it had reached that high of close to $79,000 or $80,000, but right now it's sitting a lot lower. At one point, it went down as low as almost 68,000 after we've added all the money. Currently, we are still sitting at a negative territory with this account. In terms of holdings here, we have 2 sets of holdings. Both of them are passive investment options. The first one is the Vanguard Investments Canada Incorporated. It's an all-equity ETF. It's an all-in-one exchange traded funds that allows us to get exposure to a diversified portfolio of stocks, geographically diversified by sector, and 100% exposure to stocks, no exposure to bonds or less riskier options. This was intentional because this is a longer term portfolio for us, and we wanted to get 100% exposure to stocks. Here, we currently have 2,245 shares of VEQT. It's currently down, as I mentioned, close to $11,000 with an average price of $36.35. But currently, the last trading price for VEQT was at $31.38. This holding accounts for almost 99% of our portfolio. We recently then started adding another holdings. This one is more focused on dividend payments, because for VEQT, the other holding that we have, it does pay a very low dividend, and it's only paid once annually. Typically, it's paid in January of every year. Last time when we opened up this account back in November or December, we managed to buy some shares, and we actually had close to $600 worth of dividend income. That said, though, with XDIV, you're paying and you're actually getting the dividends distributions every month. It currently has a yield close to that 4% mark, which is quite decent. And over time, XDIV has proven to show very good returns, average returns of what you would expect in the stock market. Here, it is actually iShares Core MSCI Canadian Equality ETF. You get exposure to high quality, about 30 or so high quality dividend paying Canadian stocks. It is also down here. We have 21 shares with an average purchase price of $24.52. Last price for XDIV was at $23.90. Yeah, so it's not down that much, but we already started collecting some dividend because we've started the position a while ago, and currently it's paying 8 cents per share in dividend distributions for each share that you have. It's currently it is less than 1% of our portfolio. We would like to gradually add to our positions of XDIV over time. But the truth of the matter is we are kind of dependent on that issue of the Scotia stepped mortgage to be able to actually tap into some of the equity that we've added there through prepayments or the other equity that we would like to borrow and to invest. We'll see how that goes, but this is where this portfolio currently is at. I would love to hear from you as well. If you have any other accounts investing through Smith Manoeuvre technique, let us know your experience and how is that coming along for you. We'd love to hear from you and learn from your mistakes or perhaps some of your successes. That's definitely going to be of interest to us. Thank you so much, everyone, for watching this video until the end. I hope you found it beneficial and you gained something of value from it. If you did, don't forget to smash that like button and subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, including investing in dividend stock, gold stocks, penny stocks, and crypto. We also talk about ways to reach financial freedom. Thank you, and I hope to see you next time.